So now the next topic, that is a very important topic. Corporate tax is who will pay the corporate tax and who will not pay the corporate tax. And the corporate tax will pay on which income. This is the important part. And then below we are seeing the taxable person for the corporate tax, because then here the corporate tax, the word the corporate itself is shown. This is the companies. The company is doing the business. This is the corporate tax. But the definition of the corporate tax, they say the juridical person and any other person who have the business income. Who have the business income. The important part, the business income. If you are generating the business income, that is fall under the corporate tax. Normally, even the natural person is generating the business income. We have to see in detail that even the natural person is getting the business income, but still we have to see the detail. What are the exemption for the natural person and what are the area in case of the natural person, the wages, salaries, personal investment that is not subject to the corporate tax. But apart from that, any other income that is subject to corporate tax, but we'll go through in detail. So while discussing the corporate tax, certain people who will pay the corporate tax and some certain people who will not pay corporate tax, we will go through that part also. Normally, the definition of corporate tax, we called that paid by the taxable person, the corporate tax paid by taxable person on taxable income according to tax period. So this is the definition for common understanding and as per law, how it will work. But further, we will understand how it will move. Now here we mention corporate tax paid by a taxable person on taxable income according to tax period. So now the important part here to understand what is the tax period. In the UAE, they mentioned the company accounting period will be tax period. Whatever the company tax accounting period, what is the accounting period? How we know the accounting period? The company's accounting period, it will be written as per the company law. While registering the company, as per the company commercial law, the latest one is the June 2022, in which all the latest updates are there. Based on that, whoever the company have the memorandum of association, memorandum of article in which already predefined the company accounting period, and in which many other conditions are also mentioned. Here is one important point: the corporate tax is coming now. Corporate tax regime is appearing coming now to the UAE, but the company law is past many years, past decades are there. So the corporate tax respect the company law. So now we see in the many cases where the corporate tax considering the company law and then they are applying their own regulation. So they cannot come and simply say, okay, now the corporate tax came and whatever the previous regulation that will be disregarded. They might give the update on certain regulation, but the first we have to understand the company established. Our company is a legal person. Company established based on the commercial law. So most of the things are followed from the commercial law. Why I'm referring again the commercial law? Commercial law, first we have to see the accounting period. Second, we have to see the dividend. When we declare the dividend, because the dividend mostly now the small company, they are not following they are not even following the annual general meeting. They are not following the dividend. What is the declaration? What is the profit distribution? What are the board resolution? So all this document, most of the multinational company, they are already working on that. They're following that. But the SME sector, or the small companies, they do not have the in-house compliance team. They have to check externally and see the information, what are the compliances as per the company law also. As per the company law, the audit is also required, and normally average is 90 days from the end of the year. They have to call the annual general meeting and submit the financial and nominate the auditor also. This is the company law. So even the corporate tax have the some other guideline on the audit, but the company law already mentioned the audit is mandatory. You have to work on that, and even the company established based on that. In case of any dispute or in case of any query from the Ministry of Finance or any of the DED, they will ask the audit report and they will ask all the previous data. As per the company law, we have to keep the 7 year, the previous accounting record. And as per the corporate tax also is the 7 year. Let's move to the next. Now we are seeing the taxable person. Who's the taxable person? Because in next slide, we have mentioned the taxable person details we will discuss over there. Now, the taxable person can be separated into taxable and the exempt person. Let's continue with the exempt person. So then we will see, we will go, before going, who are the exempt person, let's see who are not exempt person. Because mostly the people understand, and the UE also, other profession also, they maybe have the ambiguity on these also, they are the exempt person. Real estate companies, we will have the detail in the example also for understanding. Real estate companies, insurance companies, bank and financial institution, they are not exempt person. They will pay the corporate tax. So we here allocate, we added one example, that is a natural person versus real estate, that for understanding why the real estate companies pay the tax and the natural person will not pay the tax, because the UE government, they given some relief to the natural person in terms of the real estate. Now, maybe we've seen in the last 1 year, since the corporate tax is announced, so most of the people, even they have the property under the companies, they transferred under their personal names to take the advantage of the corporate tax. Although this is falling under the GAR rule, the anti-abuse of the city law, because you are doing this activity to avoid the corporate tax. So that is fall under the GAR rule, anti-avoidance tax rule. Anyhow, let's move to the other, that we see the exempt person. Who are the exempt person? So normally we have the details, I mentioned the chapter 3, in which we will discuss the further detail of these entities, but we will have the enough information today to discuss and understand this also. Because this area I'm highlighting here, because when you know, okay, these are the exempt person, you go and simply search on the Google also. Here I added the link for that exempt person also. So I'm opening that exempt person. Maybe I have to go out from here. I'm just going to the, I just link here. Here on the FTA website, we can see the who are the exempt person. Some are the automatically exempt, some are the notice-based exempt, some are the different criteria. I just show you how you can check on the Google and see the exempt person. But let's come back to the our presentation. We are discussing the exempt person. Under exempt person, government entity, government control entity, and the extraction and non-extraction. Extraction and non-extraction, normally we have UE resources, minerals, oil and gas, normally oil and gas, and the gold also in Fujairah, some area, the gold also there. So normally refer to the extraction and non-extraction, natural resources. In UAE, the natural resources, oil and gas, and the gold also in certain area in Fujairah. There is a certain area they have the gold also. Now the next, here we are discussing the government control entities, and okay, the government entities already we know the government entities, the government control entities, ownership of such entities with the government. We will go in the next slide and discuss what are the government control entities. Extraction we already discussed. Here we seen the qualified public benefit entities. The qualifying public benefit entities, the charities, even as per the FET, also they, if you paid the some amount, the donation to the public qualifying benefit entities, that is the you can take the exemption, but not all the entities. Whoever is listed in the public qualifying benefit entity, that whatever the amount of donation paid, that you will get the exemption from the corporate tax also. So here now the important parts, we have to understand some of the like government entities and the government control entities are automatically exempt. Automatically exempt, these are specified in the cabinet decision. So what is mean by automatically exempt? Automatically mean you do not have to apply for the corporate tax for exemption. Because first, even if they exempt, there is certain entities we will discuss, they have to be applied to the FTA and submit the application for the exemption also. Now the next is extraction and non-extraction. We discuss the natural resources notified by the Ministry of Finance. This is the notified by the Ministry of Finance, because such entities, because extraction and non-extraction, they are already paying the emirates level taxation. So the notification to be submitted. Further, we'll see what are the detail over here. Let's move to the next. We'll discuss in next slide in detail this topic. And some is the we have to apply for the corporate tax exemption also. Now we are moving to the next point, taxable income. Again, the taxable income here, the important part here, we are discussing the taxable person. We discussed the taxable person and the exempt person. Now we are discussing the taxable income. Similar taxable person and the similar like taxable income also will be taxable and the exempt income. Some income will be exempt and some income will be at the standard rated. Standard rated the 9% or 0 rated or the 15%. We will see that part also. We will see the example of the exempt income. The example of the exempt income is the local dividend. Why the local dividend is exempt? There is certain regulation also there for this local dividend fall under the participation exemption. The participation exemption, but if the local dividend paid by the UAE-based company, that company will pay the dividend after paying the corporate tax. So subject amount is already deducted the corporate tax. So again, the double taxation will not be there. So that this is the reason the local dividend will not be part of your computation for the corporate tax, because the company who paid the dividend, he paid after the corporate tax. Now the tax, and the other is the taxable income. Taxable income will pay the corporate tax according to tax period, that is a 12 months. Now let's move to the next, the exempt person detail. Again, the exempt person detail, we already, I link here the exempt person. This is also important because why I'm, even you can see on my screen also link is appearing over there. This link, you can Google it on that and go and check that. Let me click this, but we have to go out of. Again, the same link, exempt person is shown over here. I'm again coming back to the slide. Now here we the important part we are understanding here, the which are the exempt person automatically exempt from the corporate tax, and which are the person that we have to submit the application. So government controlled entities. So what are the government controlled entities? Wholly owned and controlled entities of the government. The public sector, mostly the government entities who's running the like the DED, Dubai Economic Department, and there is another companies who's wholly owned and controlled by the government. Now here, because the public entities, they are doing the mandated activities, specified activities. As per government, they have to support the to run the government operation. They are doing the mandated activities, mandate activities specified in the cabinet decision, are approved in the cabinet decision. Taxable income taxable on the income from the non-mandated activities. So whatever the activities in the cabinet decision already mandate to such entities, even the government and the government control entities, that will be exempt. But if they part of any of the operation or any of the activity that is not mandatory activities, and they will pay the corporate tax on that if they are exceeding the 5% of the total income of total revenue. So we will see in detail also what are the non-mandated activities. So here that we are saying do not register for corporate tax. You don't have to apply. By default, you are automatically exempt. If you do not register for corporate tax, you will not submit the corporate tax return as well. So government control and government entities is the same. 100% owned by the government. Now here the next point we are looking here, the automatically exempt from the corporate tax. Automatically exempt from the corporate tax, extractive and non-extractive. What is extractive and non-extractive? Let's see that. Here the right or interest in concession are carried in the state. Normally earlier, as I mentioned, if you are extracting oil and gas and any natural resource because you've taken the right for the natural resources from the government and you are paying the Emirates level taxation. So such are the extraction because extraction also will go in the, later on discuss in detail what are the extraction and non-extraction. Extraction directly linked from the if you extracting the oil or gas from the sea or the land, that is extraction. But after extraction, you are processing further that item or the commodity or the product, that is a non-extracting. Because still you are doing the refining the crude oil, that is called non-extracting, but other activities are also part of that. So here we are discussing taxable on any other income. If such extractive and non-extractive business, they are generating any other income that exceeding the threshold of 5%, exceeding the threshold of the 5%, that's subject to the corporate tax. Now, still the exempt person is continue. We have to see the another point, the public qualifying benefit entities. The public qualifying benefit entity, we already discussed, we will donation, some entities working as a welfare and getting the donation from the different organization as a charity basis, but they are approved. There is a certain criteria for the public qualifying benefit entity to get the approval. But for as a consultant or as a clients or as a working in the industry, if you are paying the donation, you have to ensure if you pay to such entities who are listed in the Cabinet Decision 37 that is available on the online, we have to search and see if such entities are covered, then we can make the exemption. Dear participant, I'm seeing some of the team members, they are writing on the screen. So, Mr. Ifkar, would you please check this? I appreciate if you cooperate in this. Register for the city. The public benefit entities, they have to register for the corporate tax, submit the application for the corporate tax. Once they register, here the difference to be understood and to be noted. Previously, we said is automatically exempt. Here we are saying is exempt, but not automatically. First, we have to apply for the corporate tax registration. Then we will apply for the exemption. Then we apply for the exemption. While applying for the exemption, we have to satisfy, yes, here I'm talking about from the public listed entities who get the exemption. They will apply to FTA and get the exemption if they fulfill all the conditions. Then and they have to submit the annual declaration also. Annual declaration, and now we are submitting the corporate tax. They will submit the annual declaration confirming that we are still meeting the condition of the exemption. because there is a list of criteria that met, then they will get the exemption. Now we move to the next and see the other exemption or other business who are exempt. Government entity that we already discussed, qualifying public benefit entities, qualifying investment fund, public pension and social fund, and any other funds, any other person. Here, the important part, the qualifying investment fund. This will be important. We have to understand the which are the funds, real estate funds, because some of the qualifying real estate funds that are the get the exempt, and some is not exempt. Is similar the public pension and social security fund, that also we have to see if we are part of the contribution of such scheme. Because what is the pension scheme? Mostly we are familiar in our home country, the people, government run the pension scheme for their employees. Here also in UAE, they the government having the pension scheme for them also. There will be different portfolio or different scheme or product still running for the government, for the national, and similar our home countries, they are also running. They have to apply for the corporate tax and then apply for the exemption based on the applicable criteria. Here, the important part, the exemption, what we're saying, they can apply. They not simply go and apply. There is certain condition that they have to satisfy and get the exemption.